Guys, Tesla stock is in an absolute free fall, down over 40% just this year, down over 50% from its all-time high just in December. Is this a once-in-a-lifetime buying opportunity, or are you catching a falling knife and seeing a disaster waiting to happen? So let's break it down. Now, before I break down these numbers, I want to remind everybody, we've talked about this in the past with Tesla years ago when everybody said, Tesla can't miss, you're betting on Elon. How things have changed so much. And we didn't sit there and say it to say we predicted this. But what we're saying is, when things are this amazing, all it takes is a few cracks to get people to really shift. Can have that kind of momentum behind a company and a CEO. All of a sudden he buys Twitter. All of a sudden he gets vocal on his political views. Now a friend of mine in Atlanta who has a Tesla now gets yelled at saying that he supports Elon. He gets random people telling him F you. That's the shift we're talking about. You're seeing well into the double-digit percentage drops of sales. Let's go look at Tesla right now. $805 billion market cap, which is still 8 times sales. Remember, typical car companies are 0.5 to 1 times sales. This one's at 8.25 times sales. That's between 8 and 16 times more than the average car company. To which I hear people say, but Paul, this isn't a car company, it's a tech company. Okay, well, I'll tell you what, that gross profit of 17% screams car. You know why? Because Microsoft, Oracle, Google, all these major tech companies are 60 to 80% gross margin. Car, 18%. Tech, 80%. Looks like a duck, walks like a duck, talks like a duck. It's a fucking duck. Now, does that mean that Tesla doesn't have some sort of tech behind it that could become a big generator of revenue? Sure, but nobody's done the math. At $99 per car per month, if they had 50 million cars out there, it's $5 billion per month. You sit there and say, that's awesome. Okay, times 12 is 60 billion a year. Let's say the gross margin on that is 60%. That's $36 billion. 36 billion times 20 is $720 billion. Guys, they're at 805 right now. Even if you add in the car company to it, what kind of premium does that take you? And you got to get the 50 million cars that currently own and handle $100 per month, which we're nowhere near that. That's the point I'm trying to make. Our fourth pillar of our principle-driven investing is a great story can become a bad investment if you pay the wrong price. And I think that's especially clear here with Tesla. 113 times earnings, 225 times free cash flow, and sales are not going well. There are protests right now about Elon because of his whole Department of Governmental Efficiency. He went from a pillar of the liberal community to now everybody on the left hates him. Or they're taking it out on Tesla, maybe so. Now let's go see what analyst estimates are for this company. Guys, major growth in earnings, 282 to 826, big time growth. 826 times 20 times takes you about $160 per share in value for 2029. Where's the stock at right now? 230. So it's saying in 4 or 5 years it should be worth 160, according to analysts. Analysts are wrong all the time. But there's a lot of momentum. It's not like they're sitting there saying 280 is becoming $3 in 5 years. They're saying in 4 or 5 years, it becomes $8.26, which is amazing growth for a company. No matter what company you have, if you're going to over 3x, if you're going to about 3x your profit, that's incredible any way you look at it. And revenue, 12%, 18.5%, 15.5%, 19%, 26% revenue growth. Guys, I have a question for you. How much of this factors in the hatred towards Elon, the protests against Elon? How much of that's factored in there? Guys, any perfect story, even if it ends up being 90% right, can still end up being a horrible, horrible investment. Look at the dot-com era. 98, 99% of these dot-com companies went absolutely bankrupt. Is the internet bigger today than it was back in 2000? Absolutely. It's infinitely bigger. And yet you still had companies go under. Why? Wrong price for a great story makes a bad investment. Now, guys, a great question was just asked of me. Paul, have you ever seen a stock where the numbers didn't make any sense, but they just kept growing and doing well and killed Amazon? Absolutely. Amazon did an amazing job of reinvesting and and not even caring about the present. But also remember, they were losing money in the late 2000s and early 2010s at a time when the market was still in its early levels of a major bull market. They had that momentum behind it. Because look what happened to them in 2000. They fell 95% in price. They went from $113 a share down to $6 per share. And then they rebounded. So the early Amazon ended up coming to fruition. Why? Because they happened to be at the wrong timing. But the later Amazon still did well and still kept compounding. The question is, are we closer to 2000 levels today? Or are we closer to the 2010, 2011 early stages of a major long bull market? Now, we have a story. What's that story on Tesla? It's a lot different than it was 4 or 5 years ago. It went from Elon can do no wrong. He's amazing. He's the greatest thing that ever existed. And if you bet against Elon, you're an idiot. To now, Elon's hated. A lot of people hate Elon. Ironically, I like Elon more now. Now, how do we put those together? We have a story. We have numbers. We put them together in our stock analyzer tool. That's the big key here. What we're doing here is we're making our assumptions of the future based on that story and based on some numbers, and it's telling us what's the right price to pay for that story. This is the reason why this software is used over 1 million times per year by our users. Guys, how confident are you in your investing decisions? Do you really truly understand the companies you're buying, or are you just following stock tips and saying, I understand it, like the Bitcoin people out there? I know what it feels like to invest without a real process because I've been there. Early in my investing journey, I bought a stock called Global Crossing. It was the next big thing in telecom, and everyone was talking about it. Who was talking about it? My sister's boyfriend's parents. I didn't do my own research. He just said to me, Paul, this is the next big thing. I didn't have a process, and I had no community to challenge my thinking. Guys, the stock went to zero. Absolutely gone. It was a painful but necessary lesson. If you don't know what you're doing, the market will humble you fast. This is why I build Everything Money. I created these tools for me to make better investing decisions. And after several videos, people were asking, how do I get that software? So we made it available to the public. And right now we have a wait list at everythingmoney.com. And here's the deal. On April 15th, we're making the major changes we've been talking about. This current offer will go away forever. If you join by then, you'll be grandfathered in for life at the best price, the best deal we've ever offered. That means you're going to be locked into your pricing tier forever. You'll get unlimited access to all of our investing tools, real estate calculator, and most importantly, our community of several thousand like-minded investors who help each other every single day. Yesterday, the market went down 4% as of recording this video. And guess what? It was high fives in the community. Guys, you need to have the right tools to make better decisions. But most importantly, guys, I want to make sure that if you join the community, you're not in there for just the selfish reason of somebody give me a stock pick. If you are, you're not going to last very long. People are going to sniff you out. This is a great community of people who truly believe in what they're doing, helping each other and becoming better investors. Investing is tough, especially when the market turns ugly. You don't want to go through that alone. So click the link in the description below. Don't wait any longer. See how it works. We have a great offer right now. But again, guys, if you're looking to learn how to fish, we're the place for you. If you want somebody to hand you a fish, go to the other YouTube idiots out there who are going to absolutely take advantage of you. We're not the place for you. So let's look at my assumptions for the stock analyzer tool and Tesla. The last time I did this, here's what I did. 10, 15, and 20% revenue growth for the next 10 years. Okay. It's a lot, but completely doable for a company like this. Profit margin. Guys, I did profit and free cash flow margin that they haven't even seen yet. Look at their history. 7, 11, and 8% for the last 10 years, 3, 6, and 3% in free cash flow for the last 10 years. I did 12, 18, and 24. So I'm assuming a big chunk of this is tech, that their whole software thing is going to work out. I am making the assumptions assuming that the tech works out. Guys, I have their bottom line margin on what their current gross margin is before paying any overhead costs for those factories, for the employees, etc. PE, price of free cash flow, 17, 21, and 25. And I only did a 9% desired return because that's the market number. And I want to see what's the intrinsic value based on these assumptions. The stock's currently at 224. Hit the analyze button. Guys, it's barely a buy today on my middle assumptions. Low assumption of 93, high assumption of 530. Guys, to me, the juice ain't worth the squeeze. That's just my opinion. Now, guys, the Magnificent Seven is struggling this year, led by Tesla. But there are 7 stocks that I believe are poised to outperform them over the next decade. In my next video, I'm going to break those 7 stocks down that I've picked to beat the market and the Magnificent Seven, because in times like these, finding the right stocks matters more than ever. So click the link on the screen to watch now. Thank you for your time.